In this presentation, we will continue on to part 2 of our fairly comprehensive problem related to the general fund and the government-wide activities. You'll recall from last time that we have the information on the left side. We've been recording that information into the blue area onto the right. We have our general journal that we then post to our trial balance in the middle column. Last time we have entered data and completed, in essence, the blue area up to line 8 or item 8. And now we need more space. So rather than continuing going down here, so we want to be side by side and be efficient with our space. So we hid some cells that we're going to now unhide. So our objective now, hide these cells and unhide these cells. Or first, let's unhide these cells and then hide these cells. So you'll note it goes A, B, C, D, E, F, G, H, and then to N. There's hidden cells there between H and N. We need to unhide them first. How? We're going to put our cursor on, I'm going to say G over here, highlighting the entire column. Hold down left click and then drag over to N so that the hidden cells are in between here. And then we're going to right click on those selected cells and we're going to unhide. So unhide, there we have it. Now I'm going to hide some of these cells that we don't need anymore because we've completed the data up to this point. So we're going to put our cursor on D, so we have the drop down in D. Select the left click and highlight over. I'm going to go all the way to H so we have as much space as possible. Right click and hide. So we're going to hide those items. We can make this a little bit smaller. So there we have this. I'm going to do the same thing for the governmental accounting over here. We had the same information where we have this is full, these general journal. So I'm going to hide the general journal, or let's unhide first and then hide. So we're going to unhide between W and AC. There's hidden cells there. So we're going to put our cursor in V, on V, and then select over to AC so the hidden cells are in between them. Right click on the selected area and unhide. So there we have it. Now we're going to hide these items because we don't need them anymore. So we're going to hide them, not delete them, but hide them. We're going to put our cursor on R with the drop down. And I'm going to select over to, let's say, V, R to V, RV. Right click and then hide those cells. All right, so now we have the information right next to where we're going to post in a nice fashion, easy way to follow. We then are going to scroll down to number 9, which is the next item that we are on. In essence, recording the payroll. So we got payroll information that we're going to be recording. We'll do that first in the general fund here. Now, we're going to record the payroll. We're just going to group it into expenditures because the payroll expense is going to be an expenditure. So we're going to say this equals the debit is going to go to an expenditure, like an expense type of account. And then we're going to have the payables in terms of the withholdings that we're going to have to pay. So we're not going to get into payroll per se, but no, we're going to have the payroll, and then we're going to have withholdings from payroll, which would include federal income tax, possibly Social Security and Medicare, depending on if they're subject to those, given the fact that they're government employees. But in essence, we're going to say that we owe something to the federal government. So due to federal government, payroll taxes, in essence, payable, that we're going to have liability account. And then we may also have state taxes, typically, that we may have to pay as well. So so the data then we're going to say is equal to, I'm going to pick up our information down here, and we're all the way on number 9. We had this amount for the payroll, and then FICA and FIT, that's Social Security and Medicare, if they're subject to those, FIT, federal income tax, SIT, state income tax. So this would be the wages expense. Then I'm going to say negative sum of the federal taxes, which include FICA, Social Security, and Medicare FICA, and then FIT, federal income tax, the withholdings we have to have. So those two are both federal taxes. And then I'm going to say negative of the state tax, which is the SIT tax. And there we have that. And then the last component is going to be cash. So that's going to be the plug, which will be the negative sum of these items. So again, we're not going to get too much into payroll, but just note this would be like the gross check. Then we took out of the gross check the taxes for federal taxes and state taxes, and this would be like the net checks that we're paying out here. So now we're going to record this out. Expenditures first. So we're going to scroll down to the expenditures. So that's in P23. Something's in it. Going to double click on it. Go to the end of it. Plus. Whoop. I don't know what happened there. I don't like that. Don't like that. We're going to say go to the end of it and say plus. Put the cursor back down. Scroll back up. And we're going to pick up the expenditures. Next, we have the due to the federal government. So we're going to go to the due to the federal government. That's going to be in P13 equals and scroll up to that 174,410. So there we have that item. Then we have due to the state government. So due to the state government, it's going to be right underneath in P14 equals, scrolling back over due to state government. And so there we have that item. And then we have the cash. So cash is up top. Cash is in P3. Double clicking on P3, go into the end of it and plus, put in the, well, then we can just point to cash and enter. So cash goes back down and we are back in balance. What about the government-wide activity? Well, that's going to be pretty much the same. This is pretty standard, nothing really unusual, nothing to see here that's different than what we would kind of expect in accrual accounting. Therefore, we'll pick up the same stuff. So we're going to say that this is going to be, I'm over here in Y3. We're going to be picking up the expenses now rather than expenditures. And then we're going to have the same kind of activity with the due to the Fed government for federal taxes, and then due to the state government for state taxes, and then cash being the difference between the two. I'm going to pull the numbers from the same journal entry. So I'm going to be in the debit equals, going to go back to our prior journal entry and just pick up those same numbers. So we'll pick up that number, going to copy that, Control C. I'm going to put my cursor here and then hold down Shift, down, down, and then Control V. So that's how I'll paste it. You can paste it any way you would like or put the numbers and populate it any way you like. So we're going to go to expenses and post that first. Here's the expenses. Here's the expenses down below. So we're in AE 17, double clicking on it, go to the end of it, plus, put the cursor back down. We're going to scroll up then to the expenses, and there we have that. And then we got the due to the federal government. That's going to be down here. So we have due to the federal government. We are in AE 13 equals, scrolling back up and picking up that liability. Then we're in the due to the state government, due to state government in AE 14 equals, scrolling back up to the state government and enter. Then we have the cash. Cash is up top. We're in AE3. We're going to have something's in it, so I'm going to double click on it, go to the end of it, plus, and point to the cash 653.80 and enter. There we have it. That looks good. Let's see what's next. I'm going to scroll back over, back to our data. We're now on number 10. So let's scroll down to number 10. Now we have the FICA taxes for the employer. So again, this is kind of more payroll stuff than anything else. It's pretty straightforward kind of payroll activities, although payroll's confusing in and of itself. This is the employee payroll, and then we have the employer payroll, which is going to be, we have to match the FICA taxes. So we got to pay the employer portion now of the FICA tax. In other words, FICA has Social Security and Medicare. We have the employee portion, and then the employer kind of matches it. So this is the amount that came out of the check. This is now the amount that the employer matches and pays over and above that. So that's going to be another expense. We're going to put it into an expenditure. This would be payroll taxes, expenditures. So expenditures, and then the other side's going to go once again to the due to federal government. And we're just going to pick up the employer taxes, which is going to be the Social Security, Medicare, FICA taxes. Social Security, Medicare. There we have that, and we'll credit it as well, and that's what we need. Then we're going to go to expenditures and post this. So we'll scroll down to expenditures. Here's the expenditures. We're in cell P23. Double clicking on that, going to the end of it, plus putting the cursor back down, scrolling back up, picking up the debit of the 66680. And then we want the due to the federal government because we haven't yet paid them and we owe this to the federal government again. So we're in P13, double clicking on that, going to the end of it, plus pointing to the 66680 credit and increasing that liability. That will, of course, put us back in balance with the green zeros. Now we're going to see what happens with the government-wide. Well, this is the same thing. Nothing very unusual in terms of accrual accounting here. We're recording the payroll, so it's going to be the same items in the governmental. We're going to say the expense rather than the expenditures. That's, I guess, the only difference. That's a difference, but that's the only difference. And then we're going to say the other side is going to go to the federal government. We're going to pick up the numbers. I'm just going to pick these up from the prior journal entry that we made. Equals the prior numbers, 66,680. Credit the same amount. Then we'll post this out. Expenses first. Expenses down below. So we're in now AE 17. Double clicking on that, going to the end of it, plus, and then we'll point to that expense and enter. So expenses increasing. Then we have the due to federal government. Due to federal government, we are in AE 13. Double clicking on that, going to the end of it, plus, we're going to point to that 66,680 and enter, and then we've increased the liability. Let's go back to our data, see what's next. We are now on number 11. So we're down here on number 11, line 41, where it says we've got revenue other than taxes collected. So it's not very specific here, but we got some type of revenue other than taxes. So that's going to be fairly straightforward. We're going to say that that revenue has collected and is therefore cash. Cash is going up. So we're going to be up here in J11. We're going to say that cash will be the debit. Cash will be increased. And then the other side is going to be revenue. So revenue, not estimated revenue, but revenue. And the amount is going to be given to us in number 11. So number 11 says that we got 951. And we'll credit that amount. So there we have it. So cash went up. So I'm going to post the cash now. So we're going to go up to the cash. There's cash. We're in cell P3. Double clicking on P3, going to the end of P3, saying plus within P3, and then clicking on that 951. Then we got the revenue. So that's in the revenue account. So that's going to be down here. We are in P21. Within P21, we're going to double click on P21, go to the end of P21, say plus in P21, and then point to that 951 credit. So there we have that. What's going to happen to the government-wide funds? Well, these are pretty straightforward. And once again, nothing too unusual here. That looked like a standard type of transaction for accrual accounting. Therefore, it'll be much the same, if not exactly the same, within the government-wide activity. We're going to say cash is going up. Cash is what it is. Other side is going to be the general revenues. Slightly different in that the name's a bit more specific. General revenues, number or amount will be the same. I'm going to say equals. Go back to the amount from the prior transaction we entered and enter, and then pick up the credit as well. Now we'll go ahead and post this out. We've got the cash up top, so cash is going to go up top. We have AE3, double clicking on AE3. We're going to go to the end of it, say plus, and then point to that 951. And then we've got the general revenues, so we'll go down to general revenues. We are in AE16, double clicking on it, going to the end of it, plus, and then pointing to that 951 credit. There we have it. We're back in balance. Let's go back to our transactions, see what's next. So we're going to scroll down to number 12. So within number 12, we have vouchered amounts due federal and state government. So in essence, what we're going to do is say that the amount due to the federal and state government, we're going to move it out of the liability account due to federal and state government and put it into what we would think of as kind of a payable account, which would be the voucher payable account. So we're going to say this is what we owe to the federal and state. We're going to make those zero, and then we're going to move those balances to the voucher payable, from where we will then pay them, taking it out of voucher payable and then putting it and paying the cash. So we're going to say this is a credit. We're going to debit it then to make it go down. So we have due to the federal government, that's going to be a debit. And then we've got the due to the state government, and that's going to be a debit. I'm going to pick the amounts up from. So we're going to pick up the amount that is in there, which is the 304,580. Note there was a beginning balance. We don't know exactly where the beginning balance was. So we're going to pick up the total amount that's going to be due, which was the 304,580. Let's double check that. 304,580. And then we have the state, what's due to the state, that 34,800. So 34,800, we're going to say 34,800 from the state. And then we're going to say the negative sum or the credit is going to be negative sum of those items. And that amount is going to go to the voucher payable. We have the voucher payable. So there we have it. And let's post this out. So we have the due to the federal government. Due to the federal government right here. We are in cell P13. We're going to double click on that. Go to the end of it. Plus, put the cursor back down. And then we want to pick up that 304,580. Then we have the due to the state government. Due to state government, we are in cell P14. Double clicking on that item, plus, and then we'll put the cursor back down on the 34,800 and enter. So those amounts down to 0, and we're going to move that up to the voucher payable. Voucher payable in P11 equals, scrolling back down, we're at the 339,380 and enter. There we have it. What about the government-wide activity? We are going to record this over here. Now note this looks like a kind of a more of a bureaucratic type of issue because we could see like another check process within the voucher. It might be an internal control process, but it's still within basically accrual accounting. We're going to take it from one liability account into the other liability account. Therefore, we will have the same transaction in essence, or exactly in the government-wide account. So within the government-wide, we're going to say that we have the due to the Fed, due to the state, and then the voucher payable. Those were the three accounts we had. We're going to pick the same numbers up from the prior transaction because they will be the same numbers. And then I'm just going to copy that number, Control C, Control V, Control V, same numbers, same transaction, same journal entry. Now let's post it. We've got the due to federal government. Going to scroll back over to the due to federal government in the trial balance. Here we have it in AE13. Double clicking on AE13. Going to the end of it. Plus, putting the cursor back down. We're going to pick up that 304,580. Then we have the state government. So we're going to say due to the state government in AE14. Double clicking on AE14. Going to the end of it. Plus, and I'm just going to point this time to the 34,800. Then we have the voucher payable. Voucher payable right above here in AE11. We're going to say that that equals and point to that voucher payable 339,380. There we have it. Back in balance. Back to our data. Going all the way to the left. We are now on number 13. Scrolling down to the number 13. So we're here in B45 where we have purchase orders encumbered, and then they were filled at this amount. So we're basically saying that now we're recording the expenditures related to encumbrances that we recorded in the past, and the encumbrances, the related encumbrance amount is going to be this, and then we have the expenditures which are at the actual amount here. So this is a bit unusual. Let's take a look at it. This is kind of the new thing, or this is one of the different things. We have these encumbrances that we recorded. You'll recall that the encumbrances was an increase to the encumbrances and an increase to encumbrances outstanding. So these balances are equal and opposite. That was basically a holding to apply out this information for purchase orders and estimates that have been made but not yet filled. So we don't typically have the expenditures until they are. Now we have the expenditure. We know the actual expenditure, which is something slightly different than the estimate. And we're going to record the expenditure, which is normally a debit to expenditure, expenses type account expenditures, and a credit to accounts payable or vouchers payable, the liability, or to cash. But we also need to reverse the related encumbrance. So as we have the expenditures come into play, if they're related to this encumbrance, we need to reverse the estimate that's related to this encumbrance, which may not be the full amount of this encumbrance, just whatever we have the expense related to, and then record what would be the normal transaction, the one related to the expenditure. So the first thing we need to do is reverse the encumbrance. So you can see the encumbrance has a debit balance. We got to reverse it for the related estimated amount. It's going to be reversing, crediting encumbrances and debiting the encumbrances outstanding. So that's the first item that we're going to have. We're going to debit encumbrances outstanding. We're going to credit encumbrances, and that's going to be for the estimated amount. So we're going to go back down to 13. We've got the estimated amount here. And so that's going to be the debit and the credit. So we're going to reverse these. And so let's post this now. Let's see what we're posting. We're posting this, encumbrances outstanding. And we're going to post that here, encumbrances outstanding, to P19. Double click on it, go to the end of it, plus. And I'll just point to it. that item. And then we're going to post the other side, encumbrances. That's going to be down here, encumbrances. We're in P24, double click on that, go to the end of it, plus put the cursor back down, and we'll pick up the credit. There we have it. And that, of course, puts us back in balance. Now, the next thing we're going to do is the normal journal entry, which is a debit and expense and credit, in this case, vouchers payable. Vouchers payable. So we're going to go back over, we're going to debit the expenditures, and then we're going to credit the voucher payable. This would be more of the normal type of transaction we would expect to see in accrual accounting. This will be for the actual amount. So we're going to scroll back down to B13, and that's going to be the actual amount. Debit and credit, there we have it. All right, let's post that out now. So we have the expenditure we're going to post. So here we are in the expenditure. We want to be in cell P23. Double click on that. Go to the end of it. Plus, and we're going to point to that amount for the expenditure and enter. Next, we have the voucher payable. That's going to be the credit. We're going to scroll up to the voucher payable. That's in cell P11. Double click on that. Go to the end of it. Plus, and then point to that credit. And that puts us back in balance. Now we're going to say, well, what's going to happen to the government-wide activity? Note the government-wide activity is not going to have any of this encumbrances business. And then we're just going to record what the normal transaction would be, which would be expenditures or expenses for government-wide and the vouchers paid. So let's do that. We're going to go back over here and we're going to say we are on the government-wide types of transactions now. The debit's going to be simply to the expenses instead of expenditures because we're on an accrual rather than modified accrual. And the vouchers payable, the amount's going to be the same as the prior journal entry, so we will pull it from that prior transaction. And we're pulling this item, the actuals, and that's the debit. Here's the credit. Let's post it out. So we got the expenses here. We are in AE17, double clicking on AE17, going to the end of it, plus pointing to that debit balance. Then we're going to go to the vouchers payable. Vouchers payable here. We are in cell AE11, double clicking on AE11 plus, and then pointing to that credit, bringing that balance up, putting us back in balance. That's it. Let's see what is next. We're now on number 14, scrolling down to number 14. Vouchers payable paid. So this is going to be fairly straightforward. We're going to have the payable. We're going to pay off the payable with cash. And then they gave us a discount. So we're just going to have to record the discount. We'll have to deal with that. And so we're going to scroll back up and say, all right, well, we know that cash is being paid. So that's going to be the third account. I'll put that down here and say cash is going out. So we know that's going to be a credit. And so whenever I see cash, I tend to want to record that because at least I know what's happened to that typically. And then the debit, we're going to be reducing the voucher payable. Voucher payable, that's going to go down because we're paying it off. And then the discount, we're going to be put into the expenditures. So we're going to get a discount. We can think of it as basically maybe we paid early, like we got a discount because we paid early. And so that's similar to what we would see in normal financial accounting. So we're going to say, all right, the voucher payable back down in 14 was this amount. That's what we're going to reduce the voucher payable for. And then we've got the expenses are actually going to be decreased. This is funny. This is unusual. We don't typically decrease, expenditures, but we over-recorded because we recorded the full amount and now we're getting a discount from it. Therefore, we're decreasing it by the amount of the discount, $8,230. And then the difference is cash that we're actually going to pay, which of course is the amount of the original invoice minus that discounted amount. And that's going to be this amount here. So let's go ahead and record this out. We got the vouchers payable, scrolling to the right, scrolling up, vouchers payable in P11, double clicking on P11, going to the end of it, saying plus, putting the cursor back down, scrolling down to that voucher payable and enter. Then we have the expenditures, that's going to be down here. We are then in cell P23, double clicking on P23, going to the end of it and plus, and then pointing to that 8,230. Then we're in the cash, so we're going to go up to cash up top. So there is cash. We are in cell P3, double clicking on P3, going to the end of it and saying plus, putting the cursor back down, scrolling back down. We'll pick up the cash that'll put us back in balance. So there's what we have, and what's going to be happening in the government-wide activity. Much the same thing. Nothing very unusual here. This is standard accrual type accounting type transaction, so it's going to look much the same, if not exactly the same, in the government-wide activity. So let's see what we... Now note the numbering system here. I put the second transaction in 13 instead of 13B. So you could... I'm going to go ahead and highlight this. I'm going to pull it down to 13B. Just so it matches our other information. And then I'm going to go back here and I'm going to use the paintbrush to fill back in the letters. So if you have it up here, it's not a big deal, but we'll just keep the numbering the same. So same information down here. We're on number 14 now. So this equals the voucher payable. That's going to be the debit. And then we have expenses rather than expenditures, that being the difference, or the only difference we really have in this transaction between the general and governmental type of activities. And then we're going to say the last account is going to be cash. There it is. And we're going to pull the same information, the same numbers from the prior transaction by saying equals and scrolling over to that prior transaction. Picking up the first number and then copying and pasting the rest. So we'll copy that, Control C, Shift down, Control V, and there we have it. So there's going to be our information. Let's go ahead and post it out in the same fashion we did in the prior transaction. So we'll go back up. Here's the voucher payable. I'm in AE11. Double click on AE11. Go to the end of AE11 and say plus. Put the cursor back down. Then scroll down. We want to pick up the voucher payable related amounts. Then we're on the expenses. Expenses is going to be up here. It's in AE17. Double click on AE17, go to the end of it, plus, and then point to that expense amount. Then we're going to go to the cash, that being the last one we need. That's up here in AE3. Double click on AE3, go to the end of it and say plus. Put the cursor back down, scroll back down. We're picking up that cash amount, that being the credit. That puts us back in balance. We can see that with the green zeros. And then we're going to scroll back down, back to our information. We are now on number 15. Let's go down to number 15. See what it says. We got the repaid anticipation note. So we repaid the anticipation note. You'll recall that we recorded the anticipation note way up top here in number 2. And it was a 120-day note. So I'm guessing 120 days is over now. If we look at the trial balance, we've got the liability, which is where we would expect to see some type of note payable. Here is the liability. All we're going to do now is pay it. So we know cash is going down. And the other side is going to be this amount here. We don't need to record the interest because of the format of this note being a short-term note, and we've recorded the interest in the form of the discounted amount at the beginning of the note, and therefore all we have to do is basically record the payment now, which is nice. That's easy. We're going to say cash is going to go down. I'm going to put that on the bottom of our transaction. I always like to think of cash first because cash is, it is cash, it does what it does. It's pretty straightforward. Then we're going to go to the tax anticipation, which is also fairly straightforward, and that's going to be a credit. We're going to debit it to make it go down, doing the opposite thing to it. And then we're going to pick up the amount, and the amount is going to be the amount that's in that balance, or we can pick it up from the data that we put down here, or from the original note data. That's the 546. Hopefully that's the same as what's in the account. Let's double check it. Yeah, 546 looks good. Everything looks proper. And then we're going to credit the cash. We're going to pay the cash, and we're going to reduce the note. Don't have to deal with the interest because we did that in Inception because of the characteristic of the note, the way the note was formatted. So let's go ahead and post this out. We have the tax anticipation note. We're going to scroll up top. Here it is. We are in cell P12. Double clicking on P12, going to the end of it, saying plus, then putting the cursor back down, scrolling back down, and picking up that amount, and enter. And then we want the cash. That's going to be the credit. We're going to scroll back up. We're going to pick up the cash in P3, double clicking on P3, going to the end of P3, saying plus, and then putting the cursor back down and scrolling back down. We're going to pick up the credit for cash and enter. So there we have it, and we are back in balance. What are we going to do for the government-wide activity? Much the same thing, because this is a pretty standard type of transaction, so nothing unusual, nothing funny, nothing to see here that's a bit different, so we're just going to do the same thing. We're going to say that this is going to be equal to, scrolling back up, we want to pick up the tax anticipation note, and then the credit's going to go to cash, going to pick up the cash, The amounts will be exactly the same, so we're going to pick them up from the prior transaction we just did. Scrolling back over, picking up that amount, and there it is. There's our debit, there's our credit. Let's go ahead and post this out in the same fashion we did prior. Scrolling back up, we have the tax anticipation note. We are in AE12, double clicking on AE12, going to the end of it, saying plus, putting the cursor back down, scrolling back down, we're going to pick up that debit amount. Then we have cash. Cash is going to be the credit. We're going to scroll back up. We are in AE3, double clicking on AE3, going to the end of it, saying plus, putting the cursor back down, scrolling back down to the credit, posting the credit. There we are, back in balance indicated by those green zeros. Let's scroll back over to the next one, see what's next. We are now in number 16, so let's see what's on number 16 down here in A53 line. Record the delinquent amount of unpaid property taxes. Okay, so what we're basically saying is that the year has passed now. We're going to move the current amounts to the delinquent amounts. So you'll recall that we had 3 different accounts for receivables. We've got the receivables current, delinquent, and then the payables. What we're going to do now is take the current amount. We're going to move it from current to delinquent. So we have both the receivable and the allowance that we need to move down. So we're going to do, I think of it basically as one thing at a time. So let's do one at a time this time. We got the taxes receivable. This needs to go to 0. It's a debit. So we're going to do the opposite thing to it, credit it. And then the other side is going to go into delinquents. So then we're going to debit the delinquent amount. And then I'll do another journal entry for the allowance, moving it from here. So I'll start off with the receivable needs to be credited. So I need to make that go to 0. That's how I would think about it. I'd say, all right, that needs to go on the bottom, the receivable, because it needs to go down. And we're going to pick up the receivable. Now note, you might want to put a formula in here and do something like this. And don't do this, because and pick up that number. You can't do it though, because then when you post to this cell, you'll get a circle reference. So this is one, I mean, you pretty much have to hard code this one. It's going to be negative 197, meaning just type it in there. And then we're going to debit something. And the debit is going to go to the delinquent receivables. We're just moving it to the delinquent. It's going to be a debit balance account. We're going to debit it, increasing it. So there we have it. So let's go ahead and post this out, and then we'll do the same for the allowance. So we're going to debit the delinquent. So the delinquent receivables, that's this one. So we are in P6, going to double click on that, go to the end of it, plus, put the cursor back down, pick up the debit, and then we're going to credit the current. So then we're going to credit the current amounts. So the current amount down here. So we're going to scroll back up, and then we've got the receivable current. That's in P4, double clicking on that, go into the end of it, plus, putting the cursor back down, crediting the current amount like so, and enter. So there we have it. That puts us back in balance. Now we're going to do the same thing for the allowance, but the allowance has a credit balance. So we need to make this go to 0. It's a credit, so we're going to do the opposite, which is a debit. And then we're going to put the other side into the credit here, which is the allowance for uncollectible. So let's do that. We're going to go back down. I'll make another journal entry called 16B. And we'll scroll back up, and we want to pick up the allowance. And the amount's going to be for 90200. Once again, we'll just hard code it or just type it in there. That's what we mean by hard coding it. And then we're going to scroll back up, and we want the delinquent allowance. And there we have that. Now we'll go ahead and record it. Here's the allowance on the current side, scrolling back up. So we have the allowance current. We're in P5, double clicking on that, going to the end of it, plus putting the cursor back down, scrolling back down, and we'll pick up that current allowance. That brings it to 0. We're going to go then to the allowance for the delinquent. We are in P7. So within P7, double clicking on it, saying plus, put the cursor back down. We're going to pick up then the credit. So that's going to be the credit. There we have it. That puts us back in balance. Now, you would think we'd be done here, but there's one other kind of funny thing that happens. I mean, what we did is we moved these two down to the delinquent, and that makes sense. So we did that. That makes sense because now those are past due. But now we've got this other thing we have to do, and that's related to the fact at the end of the year, we're going to say, we recorded the revenue on basically an accrual basis when we first recorded the revenue based on the levies. But now we kind of want to make on our modified accrual, we want to make this more like a cash basis. We want to take out the revenue that wasn't received. So we want to reverse the revenue wasn't received, which basically means the revenue, the net receivables we just had there. The net receivables represents the revenue that we didn't get cash from. We want to reverse it, but we don't want to reverse it to a receivable account because we want to keep the receivable account on the books. So we want to take away the revenue being reported that hasn't been received and be more on a cash basis, but keep the accrual account of accounts receivable, which means I've got to reduce the revenue and then put it somewhere else. And we make up this other account. You would think it'd be in like the equity type section, but no, we're going to put it into basically another liability, a subsection or another account or place that's kind of grouped in the liability section because it acts like a liability. It goes up with a credit. So that's where we're going to put it. We're going to put it here into this basically liability type area. So, and this is an unusual type of thing that we're going to do because this is our modified type of accrual type of transaction that we're going to do here. We're going to reduce the revenue. And remember what we're doing. At the end of the year, we're saying I need to make revenue go down because we overposted it on the modified accrual. I want to make it go more towards the cash basis. So I got to reduce the revenue. How much by the amount of the receivables that we just moved, the current receivables, minus the allowance. That's how much revenue that we recorded that we now need to reverse. And then we got to say, well, where are we going to put the other side? I got to credit something. You would think receivables would be related to revenues, but I can't take it out of receivables because I want to keep the receivables on the books so we can collect from these people. And so we're going to put it to this account. And so we're just going to say, we'll just put it to this account up here, deferred inflows. And then when we actually collect on these next time period, we're going to have to reverse basically this transaction of the collections that relate to it. Okay, so this is the new thing. This is the different thing. Let's go ahead and post this out. We're debiting revenues, which is unusual. We don't typically debit revenues. Revenues only usually go up in the credit direction. So we're going to double click on that and say plus, put the cursor back down, decreasing revenues. Weird, weird, weird. There we have that. And then we're going to credit this new account, deferred inflows. So here's the deferred inflows. That's in P15, double clicking on P15, going to the end of it, plus, putting the cursor back down, and we're going to credit that amount. So there we have that, and there we have it. So that puts us back in balance, and that is that. So we're more kind of closer to a cash basis, but we get to keep our receivables up top, which is nice. Okay, so now what's going to happen in the government-wide accounts? Well, we're going to do this. This isn't too unusual. This is kind of what we would expect or something similar, so that's okay. This we're not going to do. That's weird. That's not accrual accounting. So we're going to do this kind of normal type of thing and not this activity. Okay, so let's do that. We're going to scroll to the right and we're going to say basically the same type of stuff over here. So I'm going to debit the taxes that are delinquent up top. And so that's this one. And then I hit plus instead of equals, I think. I think that's what I did, but that's okay. We're going to debit that, and then we're going to credit the taxes that or the receivable current. I'm going to pick up the number from the prior journal entry equals the prior journal entry number. That's this item. We're going to credit that then, same amount. Let's post this first and then do the second component for the allowance. So here's the receivables. Make sure you're in the delinquent. So here's the receivables in the delinquent. We want to be in AE6, double clicking on AE6, going to the end of it and saying plus, putting the cursor back down, scrolling back down. We're going to pick up this item. And then we want to be in the receivable current. So scrolling back up, receivable current, that's in AE4, double clicking on AE4. We're going to say plus and put the cursor back down. This should take this amount down to 0. That's going to be the credit, bringing us down to 0. That looks good. That's what we want. Nice work. Now the next item we're going to have is for the allowance. The allowance, we're going to debit the current allowance, debiting the current allowance and credit the delinquent allowance. So we'll credit the delinquent allowance like so, and the amount there is going to be from the same as from the prior transaction. That's going to be this 90,200. So 90,200. Let's go ahead and post this out. So here's the allowance for uncollectible current. Scrolling back up, here's the allowance for uncollectible current taxes. We are in AE5, double clicking on AE5, going to the end of it, plus putting the cursor back down, scrolling back down. And we're going to pick up that debit. Then we have the allowance for uncollectible delinquent. So scrolling back up, we're looking for the allowance for uncollectible delinquent. We are in AE7, double clicking on AE7. Going to the end of it, plus putting the cursor back down, scrolling back down. We're going to pick up the credit of the 90. There we have it. So what we've done is just moved it out of the receivables that are current and the allowance and moved it down to the delinquent. Notice we don't have that funny account down here of the deferred account because that's going to be on the modified accrual rather than on the accrual. That's going to be on the general, but not on government-wide if used at all, because it would only be used, when necessary. Okay, so we're going to go to the left now, and we're going to see what we have next. We are now on number 17. Let's scroll on down. Number 17, physical inventory count. So we're going to say we counted the inventory, physical count. We're going to say is the 19.9. Now, just be aware there's a couple different ways to deal with the inventory calculations. We'll talk more about specifically the inventory calculations, but the part that's going to be similar or the same as normal type of financial accounting is we can take a look at the inventory here, and we could see this is basically an adjusting type of entry. And we have currently 16.5 here, so 165. Minus what we said the physical count was. So we're going to say the physical count was the 19.9. So minus 19900. We're going to have to adjust it up by the 3,400. So we're going to adjust it to whatever we need to get at the physical count. So that's pretty straightforward. We're going to debit to get up to the physical count. So we have the inventory. And we could do it this way. We can say it's going to be equal to this number, the count, minus, and then we can pick up this number. And that'll give us the difference we need. And then the credit, the thing that's a little bit unusual is we're going to take the credit to a fund balance non-spendable inventory of supplies. So here we go, and again, we'll get into more detail on the methods for inventory in a presentation that focuses on the two major methods. So let's go ahead and post that out. So we got the inventory. So the inventory, I'm going to scroll back up top. So here is the inventory. I'm in P10. We're going to say that equals, scrolling back down, and we're going to be picking up the 3,400. And then the more of the odd thing is the fund balance. We're going to go straight to the fund balance. So we are in P16 equals, and we're going to scroll back down and pick up that 3,400 and enter. So that puts us back in balance. And then on the government wide, we're actually going to say that there's no entry here because we're going to say we're going to use basically a different method over here. So we're going to just have the difference between the two. Again, we'll get more into the differences between them in a future presentation. So I'm going to say none here and none here. So this none, bit different none, because this is going to have to deal with a difference between the inventories being used, the different methods for the government wide versus the general fund. And again, we'll talk about those methods more in a future presentation. Now we're going to go back and we're going to make one more adjustment, and rather than making another journal entry, we're going to adjust this number 16C, where we had this item with the deferred inflow of resources. So you recall this is us moving from basically an accrual basis to more of a cash basis, but not wanting to reverse the accounts receivable. We moved the difference between the receivables and the allowance, and we recorded that as a reduction in revenue. We also had an item up here in number 6 where we had additional interest and penalties on delinquent taxes, where we recorded revenue of this $38,840, which we haven't received as well. So that's another item we have to reverse. that item is going to be, actually, we had the 38840 times 0.25, or 9710 not collectible, minus 38840, 29130 collectible. Or in other words, I'm going to unhide the cells up here so we can see these. I'm going to put my cursor in C so we can see the journal entry, and then highlight over to J, right click on those selected area and unhide. And if we go down then to the transaction number 6, we have this 840 in the receivable. We recorded the allowance, and then we have this revenue. That too hasn't been collectible, so we need to take it out when we go back to our more of a cash basis. So if we go back down to this transaction, what I'm going to do is take these two amounts, and then I also want to pick up that 29. It's a negative up here, so I'm going to say minus that 29,130, well, minus a minus, which will increase it. So it's going to be this 106,800 plus the 29,130, or the 135,930. So that represents the current receivables minus the allowance, plus the receivables for the interest and penalties that we didn't collect, which we had put in revenue and now are reversing out of revenue.